An open letter to everyone that was holding shorts positions in HIMS. The shorts thought they had this locked. They thought regulation would choke growth. They thought margins would crack. They thought the story would fade. Instead, the narrative just shifted for HIMS. And when a stock has around 81 million shares sold short, even a small shift can light the fuse. This is how squeezes begin. Today, we're breaking down 3 things. First, what is actually happening with the peptide chatter and why about 14 peptides potentially moving back toward legal compounding matters. Second, how this connects directly to the personalized medicine roadmap. And third, why extreme short interest in HIMS creates the conditions for a powerful squeeze if the narrative continues to improve. By the end of this video, you'll understand all 3 of those layers and what's actually happening in the market right now.
Welcome to the game, it's the Instant Stocks by Mikhail Kuhar.
And if you're new to the channel, my name is Mikhail. I'm a partner at X10 Day Trading. I've been working together with the team for 4 years because my highest value in life is freedom. And it's why I've been able to live remotely for the last 8 years. I've been working with businesses, 7-figure, 8-figure entrepreneurs over the last 8 years. One thing I saw time and time again is to experience true freedom in life, you need 2 things. You need time freedom and you need financial freedom. If you have time without the money, you're not free. If you have money without the time, you're not free. Which is why we built a done-for-you day trading service where you can have our pro traders trade for you. You can see our results here over the last few months. We expect anywhere from 5 to 15% returns every single month. And that's what we've been able to do for our clients. Some have portfolios up to 150K, $500,000 trading inside of our software. It's called AutoPilot. And we've developed over the last 4 years, investing over $1 million to give the everyday trader that edge to be able to be a professional day trader simply by switching on the software at the start of the day, let our traders do their work, and then you can see the results month after month. If you want to find out more, see the link below, jump on a call with me, I'll walk you through the entire process. But without further ado, let's get stuck into today's video. Let's start with the scale. HIMS is not a meme company. In its most recent quarterly report, it generated $617.8 million in revenue for the quarter. That is real scale. It has more than 2.5 million subscribers. It is guiding for billions in annual revenue, but the stock has been trading like it is one headline away from collapse. Why? Because of regulation. In early 2026, the FDA signaled tighter oversight around compounded GLP-1 products being marketed as alternative to branded drugs. HIMS disclosed it was named in regulatory communications and that the DOJ had been involved in referrals tied to marketing and compliance reviews. That created fear, and fear created shorts. As of mid-February 2026, roughly 81 million shares of HIMS were sold short. That represents close to 40% of the float based on multiple market trackers. So in simple terms, almost half of the tradable shares have been borrowed and sold by traders, betting the price will fall. Every single one of those shares must eventually be bought back. That is not optional, and that is how short selling works. So if we explain that clearly, a short seller borrows shares from a broker, they sell those shares in the market, later they must buy shares back and return them. Simply, if they sell at 15 and buy back at 10, they profit $5 per share. If they sell at 15 and the stock goes to 30, they are down $15 per share. If losses get too large, they are forced to close their positions, meaning closing means buying. Buying pushes price up, and that forces more shorts to close. That is the squeeze loop. Now, layer in a new catalyst. There is growing chatter that about 14 peptides could be moved back towards legal compounding status. That discussion gained attention after public comments from US Health and Human Services Secretary Robert F. Kennedy Jr., who said he wants to increase access to certain peptides that were restricted under prior regulatory actions. You can see a bit of the clip here of him speaking on the Joe Rogan podcast.
There were 19 peptides that were widely formulated by compounding pharmacies during the Biden administration. They illegally moved those to category 2, which says do not formulate. It was illegal because they're not supposed to do that unless there's a safety signal. And they didn't have a safety signal. They're not allowed to look at efficacy. They're not allowed to say, well, we don't believe these are efficacious or whatever. They can only look at safety. So they move those to category 2, which means do not formulate. But what happened? There was huge demand for peptides. And so a black market came out. And the black market is run by companies that say that they're making the peptides for animal use or for research purposes. And that peptide now basically completely replaced the legal market. The pharmacies, the compounding pharmacies, were getting those peptides from FDA-inspected facilities, and some of them in India and China, but they were the same one that the pharmaceutical industries are buying them, and we inspect those. So you're getting a good product. You're getting what you bought, what was advertised. With the gray market, you have no idea. And a lot of this stuff that we've looked at is just, is very, very substandard. I'm very anxious to move, probably not all of those peptides. Some of them are in litigation, but about 14 of them back to making them more accessible. And FDA is in the middle of I think, within a couple of weeks, we will have announced some kind of new action. And my hope is that they're going to end up they're still looking at the science. My hope is that they're going to get moved to a place where people have access from ethical suppliers.
So he wants to increase access to certain peptides that were restricted under the prior regulatory actions. So media coverage described the possibility of moving some peptides from the FDA's Category 2 list back towards a Category 1 under the new interim compounding framework. So here is what that means in simple language. The FDA uses categories to describe whether bulk drug substances can be used by compounding pharmacies. Category 2 substances have been flagged for safety concerns or insufficient information. And then Category 1 substances are generally under consideration and can be compounded under certain conditions while review continues. So if peptides move from a Category 2 towards a Category 1, it signals more flexibility for compounding pharmacies. Now, this is not a finalized policy. There is no official rule change yet. This is just direction, and this is just talk of where we could potentially be going. So this is political signaling, but markets trade direction. Now connect that to HIMS. HIMS have consistently framed itself as a personalized medicine platform. The idea is simple. A customer enters for one need. That platform expands to meet more and more needs over time. More categories mean more retention. More retention means higher lifetime value. Chances are also there's a higher average per monthly spend per customer as well. Now, peptides fit into that broader roadmap. They represent specialized treatments that can be delivered through telehealth and licensed pharmacy partners. I'd love to know in the comments below, if anyone's watching this, have you used peptides before? Like, what's been your experience? What have you used before? I know personally for me, I've used TB500 and BPC157 to fix some inflammation and tears in my knee. I had some really great results with it. I think I expected a bit too much because it was so hyped online. What I actually need probably is another surgery. So outside of that, I did see some great initial results from using them. Now, if access expands legally, it supports the idea that personalized medicine offerings can grow rather than shrink. And now for shorts, that is uncomfortable because the short thesis has been built on restriction. The thesis says regulation tightens, margins fall, growth slows, valuation compresses, but what if one regulatory lane tightens while another potentially opens? The certainty of that thesis weakens and squeezes can start when certainty cracks. Now, if we talk about positioning pressure, with roughly 81 million shares short, even 10% of shorts covering equals 8 million shares of buying. If average daily volume is around 20 to 30 million shares, depending on the week, that is a meaningful percentage of liquidity. And squeezes are not orderly. They do not happen on average volume days. They happen when price gaps. Imagine a short who entered at $18. The stock moves to $22. Losses grow, then 25. Now risk managers call. At 30, margin requirements rise. Some funds reduce exposure. Those buy orders push the stock to 35. Momentum traders join. Options activity increases. Gamma exposure builds. And this is how vertical moves begin. The key point is this. Short squeezes do not require perfect fundamentals. They require extreme positioning and a shift in narrative. Right now, HIMS has extreme positioning, and the peptide talk is a narrative shift. Even if peptides only become a modest revenue stream, the market may price in optionality. Optionality is powerful when valuation already reflects fear. So if we look at this balanced, regulatory risk remains real. The FDA have publicly documented safety concerns around certain peptides and compounding practices. Nothing has been officially reversed. Investors must understand this. This is not certain yet, but the presence of discussion at this level really changes the perception, and perception drives short-term price action. The market does not wait for final paperwork. It moves on probability. If probability of broader personalized medicine offerings increases even slightly, the short thesis becomes less certain. And when almost 40% of the float is betting on downside, less certainty is dangerous. So if we zoom out, HIMS is already operating at hundreds of millions per quarter in revenue. It has millions of subscribers. It is expanding in categories. It is investing in growth. The bear case depends on contraction. The peptide story introduces expansion, and that contrast is enough to trigger repositioning. And repositioning in a crowded short can become acceleration. This is not about hype. This is just looking at the maths that we're currently seeing. Shares sold short must be bought back. If buyers step in while shorts step out, supply tightens, price rises faster than expected. That is the squeeze dynamic. And that is what I feel like we're going through and looking at right now. The shorts believe regulation would close doors. Now there is public discussion about reopening some. Roughly 14 peptides potentially moving back toward compounding access is not a confirmed rule change. Now this is not a confirmed rule change, but it is a shift in tone. In a stock with about 81 million shares short, tone really matters. Narrative cracks matter. Optionality matters. So here is the real question. If personalized medicine expands instead of contracts, and even if a fraction of shorts begin to cover, how high can positioning alone push before the fundamentals even catch up? That is the tension building right now, and tension in markets do not release quietly. Let me know in the comments below what you currently think about this squeeze. Where do you feel like the price could be going over the next few weeks? For me personally, I'm a very long-term hold in this. So whatever the price happens, it's great to see it coming up now. If it goes up and down over the next few weeks, I'm really looking at this as a long-term play. If you want to see more HIMS videos daily, check out my other channel here. Subscribe to this channel. I'm bringing you content every single day, about 10 videos a day on both channels. I look forward to seeing you here tomorrow, where we will be back with another video. See you tomorrow.